Welcome to Emerge. My name is Theodora and I'm the founder of Unconventional Ventures. Now, 2020 did not turn out the way we expected. With a tsunami of mega deals being announced in the first few weeks of the year, many thought it would yet be another banner year for fintech funding and M&A activities. Then came the pandemic and the economy came crashing down like Jenga blocks. With jobless claims hitting unprecedented levels, what do consumers need the most and how will financial services react? What roles do fintechs play in this new world? And how can we as an industry be more purposeful in what we do? In the next 40 minutes, we'll consider the trajectory of fintech, its capabilities and limitations, and the role in the future of financial health. So now let's introduce the panelists. We have Andrei Cherny from Aspiration.
Hi, glad to be here.
And we have Emmalyn Shaw from Flourish Ventures.
Pleasure to be here.
And we have Ennie Lim from HoneyBee Financial Wellness.
Thanks for having me.
And last but not least, we have Hans Morris from Nyca Partners.
Great, nice to be with all of you.
It's wonderful to have you all here. Now, the financial crisis and the health crisis, if you will, has laid bare the structural inequalities that we face in the society, especially for those that are poor, the ones that are non-white, women, and gig workers. Now, while some people might be celebrating that, oh, yay, the national unemployment rate has actually fallen the last month, if we dig a little deeper, Asians and African Americans actually saw their rates increase from April to May. And overall, let's be honest, unemployment is still at quite historic levels. And so unsurprisingly, Annie, I think last time we talked, a lot of the people that are in line at a food bank had actually never been in a food line in their entire lives, according to Feeding America. So let's start with you and Andrei. What are some of the most pressing needs of your customer base at this point? And has your work changed in the last few months to meet those needs?
Yeah, so we work directly with employers. And like you said, over the last few months, we've seen how it's impacted employers, employees, and their families. And we've been speaking to employers where they had to unfortunately reduce workforce hours, workforce pay, and furlough and or lay off part of their staff. And employers were starting to tap into their retirement savings. And so getting access to cash was and still is a pressing need for employees nationwide. You mentioned food banks. We actually work really closely with the nonprofit sector and especially food banks. And like you mentioned, we saw a huge spike in demand with their services. And although there were no layoffs with food banks, 1 out of 5 households were still losing income. And that was causing a lot of financial stress for employees. And part of what we did is we ensured that not only just employees, but families had access to our on-demand financial counseling services. So we help employees and their families that were laid off navigate through the unemployment application process, keep them up to date with information, whether it's freezing rent, consolidating, or refinancing their student loans. And just to briefly touch on the structural inequalities that you mentioned, so we provide access to our 0% interest loans regardless of their credit. And we've been working closely with Washington University over the last year, thankfully through the Financial Health Network. And our data indicates that 88% of the people that utilizes our program happen to be people of color, women, or both. So being able to provide equal access, we're able to have the opportunity to be part of employers' diversity and inclusion initiatives. And when employers acknowledge that there are systemic barriers to financial health and actually provide solutions where their employees can get access to credit, more people of color and women within the workforce can feel more included. And it's an opportunity to really have new perspective, open up new discussions about equality, which is all part of creating a diversified and inclusive workforce.
Thank you, Annie. And what about you, Andrei?
Yeah, I think for Aspiration, it's really been a chance to think about who we are, what we're doing, why we're doing it, and really an opportunity to redouble those efforts in a fundamental way. Aspiration, we think of ourselves as a financial institution with a conscience. We're really focused on bringing to everyday Americans financial products that help them both do well and do good financially. And we've seen, I think, over the past 3 months, an increased need for both aspects of that, both that do well aspect for all of the kinds of economic challenges that we know and that you referenced, Theodora, but also the do well, also the do good aspect as well, in the sense that people are having a moment where they're really thinking about what's important to them and what kind of world they want to live in, and the enormous challenges we've faced and what we've gone through as a country over the course of 2020, whether it's the public health challenges and the 120,000 plus Americans who've died, whether it's the economic challenges, whether it's everything we've seen surrounding the protests against racism and what that has brought to the fore for so many Americans. And for Aspiration, I believe what we've really thought to do is how do we do even more in this moment? We've seen for us, our customers actually leaning into the Aspiration experience. While, of course, there's been so many challenges around consumer spending, at Aspiration, June will be the 4th record month in a row in terms of the amount that our customers have been spending with Aspiration and our debit card. We launched a couple of programs in early April, right in the midst of COVID and when things were hopefully at their peak, though maybe that's too soon to say, but certainly in a dire moment. And one was something called Aspiration Plus. There was a offer that had a monthly subscription fee with a number of benefits, including something called Planet Protection that makes all your driving carbon neutral, and something else called Plant Your Change, which rounds up each one of our customers who sign up for it, each one of their transactions to the nearest dollar, and uses that to fund planting a tree with every purchase. And we did that with some trepidation, of course. Was it the right thing to do? Was it tone deaf to ask people to pay more in a monthly subscription fee, or to round up each one of their purchases and spend a few extra cents to make sure that they're able to plant a tree with every purchase? But decided actually this is a moment where we had to step forward and realize that part of why we're in this challenge as a nation, whether it is because of COVID or whether it is because of the kind of challenges we've seen around the Black Lives Matter movement, is because there's been these unmet needs, and that we as a society have not reacted in a big enough and bold enough way to issues that had been simmering, whether it's something like reacting to the pandemic or whether it's something reacting to issues of racism in our society. And that for something like what Aspiration does around climate change, this was a chance to really do more. And we've seen customers react in ways that were much bigger than I would have ever expected. Almost half of our customers now signed up for one or both of those in just a matter of weeks. And I think that speaks to this trend that we've seen over the past few months, which is really people thinking about sustainability, people thinking about conscience, people thinking about values in the midst of all these economic challenges, not more, not less in the way that some people would have predicted, but in fact, even more.
I would agree. I think if anything, this is not the time to back off the paddles, but more so is to keep going forward. I think it's important. We cannot buy the time back, unfortunately. So let's switch over to our two VCs, Emmalyn and Hans. How are some of your portfolio companies addressing some of these challenges that we've been seeing the last few months? Let's start with you, Em.
Great, thanks. As you know, we focus on advancing financial health and economic resilience. That's the premise of our and thesis of our fund globally. And our premise is thinking about, can we increase access? Can we improve services at the lowest cost for consumers? So given that our direct-to-consumer portfolio is very much built on mobile first, very much taking advantage of where we are today, particularly in a COVID environment. But we've always prioritized the consumer's pain point. That's been a very important part of our value prop in determining what financial services make sense in advancing financial health. Maybe I'll just share a couple of examples across our global portfolio. We have about 9 challenger banks, 2 of which in the US, including Aspiration and Chime. And at the base level, just there was a fundamental need for free checking and savings, something with transparency and trust built into the system, and the ability to really to leverage your banking relationship with a challenger bank in order to get additional services that advance financial health. I think we've had this across a number of different globally, and so as a result, different models, business models emerge, but by and large, that need was pretty pronounced. If you look at America, we've got gig workers, of which there are many, all looking to build a portfolio of work. Some are looking to augment work, and Steady's building a portfolio of hourly work by region, optimizing by employer. And again, pre-COVID, that was very important in terms of thinking about how do you improve and increase your income in a time in which income is quite stagnant, where fixed costs are increasing rapidly. But if you think about the COVID environment, you have folks who are not traditionally gig workers now flocking to the site and flocking to the application in order to augment their income. In markets like Bangladesh, where there's 450,000 SMEs on a Facebook first platform, of which 80% are occurring online through the SMEs, we backed a company called ShopUp, and they're providing an integrated storefront to manage online storefronts for consumers. So that's logistics, that's inventory, and that includes lending against working capital. And finally, I'd point to another point, thinking about Asia and Africa. We've got a company called Pula who provides germination insurance specifically for smallholder farmers, right? What happens if rainfall fails to take place? Is there insurance along that dimension? So we've always really thought about what is the pain point of the consumer at SME. And in COVID, these needs only magnify given our focus and given our portfolio.
Hans?
Well, we do several types of fintech, but we only do fintech, and I'd say probably 20 or 25 companies are doing something related to helping consumers and small businesses. So that includes lending businesses like Lending Club and Affirm, and a company like Nova, which enables immigrants to get access to credit through APIs to foreign credit bureaus. So there's lots of companies that are doing, we think, providing access to credit, facilitating access to credit. But I think I'm going to highlight a couple of companies. One, because it's very specifically reacted to COVID in a I think innovative and effective way. One is Propel, and they enable people primarily who are on the SNAP program, food stamps, to make better use to efficiently access and see and optimize the benefits that they're entitled to. And they're now up to 4.8 million users, monthly active users. And that's not necessarily good. I mean, that's partly a reflection of more people needing access to the SNAP program. But they've really, I think, created some very innovative products, one of which is they called it Project 100. And they raised $80 million in donations and distributed $80 million to 80,000 people, deserving people on food stamps. And as it turns out, that's the largest private cash transfer in history. And so you're frankly just appealing. These people need money, and they target it. And so your money is very efficiently, like there's no service fees or anything. It's just going directly to people that need help. And something Andrei, and I think everyone has said this, that it's a very emotional moment for everyone. The people who are affected are obviously going through a lot of emotional anguish, and whether that's economic or physical health. But then I think many Americans have also reacted, and people around the world reacted, saying that they're very empathetic, and the fact that you have a dialogue about race taking place in the United States that's very intense, actually, and it's engaged everyone. It's, I think, made some people respond quite effectively. So I think Propel took advantage of that in a way that really helped their customers. Another one, which I think is interesting, is Savvy, which helps people who are entitled to education benefits. So there's deferments and forgiveness programs, which affect about 14 million Americans are eligible for these, and yet many people who are eligible don't sign up because it's a big pain in the neck, or they sign up and then they don't refile. And so they're like the TurboTax for that. And I think return on education and how to optimize your education, how to make that less expensive, and also make the most sense of what that, what the return should be for individuals is a big issue for this country and for many people. And I think they've done a great job, and they've had huge increase in signups. Again, maybe not necessarily not a good development, but the fact that they've got an effective solution is a good development.
I agree. And I'm a big fan of Jimmy too. I read about the Project 100 and that's awesome. We need more initiatives like that, like you say, that directly helps the consumers put money in their pocket. Now, looking back a little bit, it's been 12 years since the last financial crisis, which, has given birth to a lot of great fintechs, new business models, new ways of doing things. It's given rise to share economy, for example. What have we learned about what worked and what didn't work? And I'm just going to ask you guys one quick question. Do you think fintechs have done a good job in improving consumer financial well-being? Andrei, why don't you go first?
I say this as a fintech co-founder and CEO, which is
absolutely not biased.
Well, not biased in the sense that my answer is no. I think that the promise of fintech has been unfulfilled to this point. That the proof is in the pudding when you look at the economic challenges still facing so many Americans. I think the promise is still there, but I'd say that a lot of the efforts have been maybe nibbling around the edges, maybe thinking that the solution is going to be first and foremost around technology and about digitization of the same kinds of offerings and solutions and approaches that were existing in an offline world. And the thing about fintech is there's nothing inherently unique about that. Fin has always been tech. Western Union was the fintech of its time of thinking about transmitting money through the telegraph. And you go through any time period, ATMs, whatever else may have come along. I think the opportunity was to and is to think about how do you break away from legacy ways of doing business and fundamentally think about different business models, different structures, doing the things that the incumbents can't do. And there's been a lot of progress there, but just when you look at what's happening to so many Americans, I think we still have a long, long way to go.
Ennie, what do you think?
I think in the wake of this pandemic, it's pretty evident that financial insecurity, it's happening all over the nation, and the government is really not addressing it in a sustainable and responsible way. But to Andrei's point, I do feel a lot more can be done, but in order to address these financial insecurity, provide financial inclusion, I think that the public and private sector need to collaborate their efforts together in order to address all of these issues. Like Hans was saying, with Propel, they've done an amazing job during this pandemic. It's unfortunate that so many people had to sign up, but I also do feel like fintech has done a great job in improving consumer well-being. So we saw it during these challenging times. Companies like Lendio, Square, Cabbage were able to help disperse PPP loans. But still a lot more can be done, I believe.
Do you agree?
Yeah, I mean, look, I think this is an interesting time. I think since the last recession, there's been, you're right, quite a bit of innovation, right? We had Credit Karma coming out, you had Square, WhatsApp, Venmo all in 2008. There's been a lot. And I think in terms of innovation, alternative lending, you got digital payments, you have, distributed ledger, and then you've challenger banks as big pushes over the last 10 years. in my mind, I agree with Andrei in terms of there's a lot more to go. But I would say of those massive innovations, challenger banks in particular have been probably the greatest, made the greatest strides towards advancing that. And I say it not because, again, that it's providing basic free checking and savings. I think that's kind of part and parcel table stakes. It's really what they've provided as a result of engaging with that consumer. So once you build in the trust, you know, have cash flow data, and then you're able to look at whether or not there's overdraft fee protection, whether there's a wage advance, and can you build credit, and can you think about innovative credit building products? And then comes budgeting and savings nudges. And I think those in aggregate become meaningful. If you look at some of the platforms globally, they've all been able to showcase increased savings rates from consumers on those platforms. So that's the starting point. Now, we're an impact. We're a fund that's based on a systems change. And I think Andrei shares that perspective. And so that's not enough, right? We want them to be successful. But what it really needs to do is inspire incumbents to say, wow, we need to really review our predatory actions and our own pricing. And how do we shift those to really benefit the consumer? And I think only then at scale do you actually see really the consumer at large benefiting from financial health through practices that are really broadly developed. So that would be my point. I think in terms of what else has worked, this idea of trust needs to be rebuilt. I think since the last recession, trust was destroyed. And so fintechs have an opportunity to really build that. And it starts with clear transparency. It starts with the ability, like Andrei's company, to be able to provide consumers the ability to actually expend and invest in like-minded companies that are aligned in value. And I think most importantly, the business models have to be aligned with consumer outcomes, right? So that's what I think has worked and will continue to work. What hasn't worked, and particularly pronounced now, is our infrastructure. I think we're about good 10 years behind, roughly, I think, in the US. And today, you know, the US did a great job rushing on the stimulus side to respond, and that was wonderful. The problem is the execution was pretty poor. And it's because we've got a really outdated systems. And so we saw that on the consumer side with the $1,200 of stimulus that took over a month to weeks for a hard copy check. We're in digital era here, we're getting a check. On the unemployment insurance, it's taking up to 30 days state by state. Everything from onboarding to application process to distribution, backlogged. And it's really because of the systems. I mean, we're still working on COBOL when it comes to state and federal systems. And we've got folks trying to band-aid the system in order to actually distribute the needed capital. So if anything, that's where we need to really think about massive rehaul and infrastructure. And I'd love to see that come out of this clear call to action.
I agree. This is probably not the best time to bring up the fact that I have to write myself a personal check to deposit in my other account. That's the only way I can move money. But I was thankful at least I can take a picture of the check so I don't have to go to the branch. Silver lining. Hans, you have quite a few companies in your portfolio. So let's build on that topic of trust that Em was just talking about, because that's one question that we always talk about. How can challenger banks go about building trust and growing that relationship so they can get out of just being, you know, that other bank that you go put a little bit of money to play with? Instead, they can gain and have the primary relationship with the customers, especially with gig workers. How do they go about doing that?
Well, I think trust, in many ways, the financial crisis enabled, I think the financial crisis combined with the expectations of consumers on the type of tech experience they expect created a trust opportunity that many fintechs did seize. So if you go back, I mean, I would say 20 years ago, you'd say, who in their right mind would have given some application like your bank login credentials? No one would. And yet there's hundreds of apps that do just that, and people sign up for it. So to me, that has incorporated that's a very strong indication that people do trust these apps. There also was a real abrogation of trust with financial institutions, and primarily banks. And I in some ways, I'm empathetic to the banks. They had certainly they made a lot of stupid decisions. Some of them did, but they were just, they had to respond to this massive re-regulation cycle, due to problems that they helped cause. So I'm not defending them, but they also, they persisted then with fee arrangements that made no sense, had no lot. They did that because they financially had to. They were fighting for survival. They shut down lots of their own innovation and cut out projects that made it so that all kinds of things were painful and difficult. And so I think they abrogated quite a bit of trust, which many fintechs seized. And I think that it's interesting that when you look at companies like Acorns or Digit or many of the challenger banks, they have really good relationships. People are proud of that. They like the brand identity that carries. Chime, I think, has done a terrific job in that. Aspiration has done a very good job on that. There's an emotional connection that people have established with these apps. Right now, I'd say the banks, which had a terrible financial crisis, are having a pretty good COVID crisis. And I think they're very aware of this issue and very aware of the duty that they have to, and the public role that they play to not make some of those same mistakes. And they're forbearing a lot. They're facilitating all kinds of money moves. You look at who got deposits in the first quarter. So JP Morgan grew its deposit base by $200 billion in the first quarter. So a lot of money is going to those institutions, Bank of America and JP Morgan and Citi, and because they are trusted in this crisis, I think, more than they were in the last crisis. So I think, summarized, I think many fintechs have very strong branded relationships with their customers. And I think that, but I feel the banks have actually done a much better job so far in this crisis than they did last one.
Yeah, I like the part you talk about the emotional connection. I think we do see that with some of the challenger banks that stand out. There is a really strong emotional connections between what their value prop is, what they're trying to do, what they stand for, right? And in terms of a purpose to the clients that they serve. I think the next 12, 18 months is going to be really telling. Now, as some parts of the economy try to reopen, I need to say that cautiously, but at the same time, as some of the payment holidays, the unemployment benefits are ending, many people predict that millions of Americans will start falling off the income cliff. There's only so long that you can hold off the eviction, hold off paying mortgages and all of that. I want to look a little bit at that, and at the same time looking at what we've been talking about for the last 15 minutes on how the fintechs have been rising to the challenge and helping consumers in various ways. What are the areas then now fintechs will need to focus on to get consumers back on track, to get them back on their feet for the next few years? What are the plans? What would you be focusing on? Let's start with you, Ennie.
Well, I think Americans were already in financial distress pre-COVID. And even though, like you say, the economy is loosely reopening up, people need access to credit now more than ever. So I believe the current credit score system creates a huge disadvantage for the hardest hit communities. Fintech companies can address these inequities, especially for people of color, by using other data points in order to determine a borrower's ability to repay. We've been able to mitigate our risk by using other factors like wages or tenure. And just in the last 4 years, the average user is they earn about $40,000 to $50,000 a year. Average FICO score is about 540, and our default has been less than 2%. So it's factors that we know it's possible, and we don't have to underwrite based on credit. So there's a potential for fintech companies to make an enormous difference in reducing these economic barriers to allow people of color to gain full access to the financial services that's provided today.
Thank you. And what about you, Hans? What would you advise the fintechs in your portfolio to be focusing on? What do you tell them?
I think and I think this has been greatly affected by COVID. There's 3 areas in particular that are very, very important areas of investment, and I don't think consumers have good tools to manage it. And those are financing your education and what is the best ROI for you. And I think COVID has demonstrated that, you can, for certain kinds of education, I think online education is probably demonstrated its efficacy, particularly for certain skills acquisition. And so not only what, how you should finance it, but what you should finance and what are those choices and what is your ROI. I think similar issue on childcare. Childcare is complicated. It's a very big area of spend, and it's a big financial decision, and you should finance that too, for many people. In other words, instead of leaving the workforce and taking care of your child because it's expensive, what are there better tools to finance that, and what is the best system to do that, and what's your ROI? And last is medical expenses. There's a problem with the United States in general, which is we have way too much reliance on individuals need to navigate this very complex set of choices, but then almost inevitably there is going to be a significant out-of-pocket expense for many Americans, and how should you finance that or save for that or optimize that spend? I at least feel that the tools for all three of those very significant areas are inadequate.
I absolutely agree. And I think I'll add one to financial longevity as well, right? As people are starting to withdraw money from retirement accounts, what's the long-term impact of that? Where a lot of people actually didn't even have a nest to begin with. I think it's going to be challenging times for a lot of people. And what would you advise your portfolio companies to do?
Yeah, look, I think that, so we focus in the US on the 70% of US Americans who live paycheck to paycheck, right? For whom $500 does not exist for an emergency should it arise. And so against that backdrop, and in light of COVID, that population has only increased. And when we think about forbearance, we think about the stimulus efforts, all of which will come to an end, you're right. And when it does, there's going to be massive implications. And we're already at north of 14 trillion of debt in the US, consumer debt. And that's primarily driven, and higher than that is the Great Depression, primarily driven by the increase in mortgage debt in particular. But as you think about what are the consumers going to need the most in the short term and probably through the next year as they're trying to restabilize, it's really around debt management. And that's an area that we've spent a lot of time building a portfolio around, whether that includes, managing your home mortgage through EarnUp and others, which allow for payment, setting aside amount of payment so that you can pay it on time with the help of loan servicers. Whether that's in the form of student loan debt. How do you think about giving the best optimal student loan options through summer, and really getting them into income-based repayment plans, which are really fundamentally aligned with the income flows, the cash flows of that individual, or even just unsecured credit overall with companies like Clerky and others, all of whom looking for creating debt settlement, debt management tools for consumers. I think that's going to be absolutely critical in this day. And whether it's individuals or whether you add on to your pre-existing offerings, I think it's going to be important for fintech platforms. And then I think also just obviously the real-time budgeting and the savings nudges and creative ways in which you can automate cash flow is going to be very important for consumers as we go through improving resilience. And again, I think this is where fintechs need to really prioritize if they want to help be part of the advancement of financial health, particularly in the US and globally for that matter.
Yep, I agree. And Andrei, what about you guys? What are your plans for the next few years?
I think that it really goes back to what Em was speaking about and Hans was speaking about, which is really how do we capture this moment? And so much of it comes down to trust. There's all kinds of things that Aspiration offers to its customers that are just, without question, much, much better than what they're getting from incumbents. And that's true across the board in so many of the fintechs that everybody on this panel has been mentioning and talking about. There's so much innovation happening that would, as it's being increasingly adopted, make a bigger and bigger impact on people's lives. But trust is the door to that. And the financial industry has done better in some ways this time around than it did 12 years ago. But that doesn't change the fundamentals of it. The distrust that was built up over the past number of years towards the incumbents in the space didn't just appear because of their actions around 2007, 2008, 2009. It came because of a fundamental misalignment of interests between institutions that were doing better and better the worse that their customers were doing. They were making money on overdraft fees and late fees and had that as their core economic profitability proposition. And then we're misaligned around values. And for fintechs to be able to really meet the scale of the opportunity, we have to continue to think about trust. We have to be able to not just offer great products, great services, great features, but think about what it is going to take Americans to feel ready to adopt them and to know that they have a financial institution or financial institutions that are truly on their side.
Thank you. I cannot agree more, but you already know that. I'm a big fan. So before we wrap up, I want to ask you all a question. To deliver on that promise, right? That is there, but as yet unfulfilled to a large degree. And knowing what we know right now, what has worked, what hasn't worked, and the state of the economy and the needs of the consumers and all of that combined together. What do you think will be the best way for us to deliver against that promise? Do we see we would need more, there will be more consolidation in the space? Do we see we'll need more partnerships between the incumbents and the startups, or between big techs and fintechs? What do you think? I do like the point earlier. I think, Ennie, you mentioned that we need more public and private collaboration, right? The problems and the challenges are so vast that not one entity alone can figure it out. So what do you think, Em?
Yeah, I mean, look, I do think that just to answer your question with respect to the activity level, whether it be partnerships and M&A, this is unprecedented going into COVID, and that will continue, right? You know, you've seen everything from the Plaid visas and MasterCard and Vicinity, and you've got Credit Karma, you name it. And I think on the partnership side, we're seeing these large banks, you know, Goldman and Amazon, and you've got Google, and you know, just trying to really actively become part of the fintech ecosystem. And I think that's going to absolutely continue. They're going to be very opportunistic. They're going to, in fact, a number of the large companies with large balance sheets are looking quite actively about how they can extend their reach through some of the dislocated startups, et cetera. And so I think there is a push broadly to continue seeking those partnerships, both on the incumbent side, but as well as on the fintech side of the house. I think, and I agree with Ennie, I think at the end of the day, we need public and private to come together in a meaningful and thoughtful way. You know, 10% of our capital in our fund is actually dedicated towards engaging in stakeholders, engaging in regulators and policymakers, helping them convene, helping them think about technology, fintech, how to regulate it differently. I think it's going to be, and as I mentioned on the federal and state side, the infrastructure alone is fundamentally and woefully antiquated. So there's going to be a number of pieces, both overhaul of their own systems, but also a willingness to really reach across and integrate and discuss more actively with fintechs how they can be part of the solution to advance financial health. And you're seeing a lot of that. So let's be clear, it's not like it's not happening, and I think this has been a great important forcing function within COVID to do that more actively. So I'm quite hopeful that will continue.
Has been a moment of reckoning, absolutely. So thank you so much, everyone, for joining us, and thank you for a wonderful discussion.
Thank you.
Thank you so much, really appreciate it.